Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Welcome to the only show in the country dedicated to helping savers worry less about money, the Worry-Free Retirement, with your host, nationally recognized retirement specialist and four-time author, Tony Walker.
Hello folks, Tony Walker here. And for more than 37 years, I have hosted hundreds of educational workshops of all sorts, sizes, and locations throughout Kentucky and southern Indiana. That is, until March 16th, 2020, right before all heck broke loose due to an unexpected pandemic. You see, due to the difficulty in continuing these live workshops and coming to the realization that our television show and radio shows already reach thousands of households each week, we made the decision to discontinue hosting live educational workshops. However, with all of this said, armed with a live audience and my trusty overhead projector back then, that's right folks, I do have the heart of a teacher, I do miss those live educational workshops of the past and educating those in attendance regarding various financial topics. So today, you are in for a real treat as I recreate one of my most popular workshops of all time called Annuities 101. And while I won't have my handy-dandy overhead projector to assist me, I do have in our Louisville studios this morning America's favorite financial sidekick, Mr. Aaron Orander. Good morning, sir.
Good morning to you, sir. How are you today?
I'm actually doing really good. I don't think the mowing sound outside is being picked up too much on the radio here. We, with the rain, generally we have it timed out. We have mowers show up at our building every week. They were supposed to be here yesterday. The rain, I guess, forced them here today. So
I guess they're here today.
Yeah. Well, anyway, we'll have a nice...
Show must go on.
That's right. Show must go on, folks.
Speaking of shows, I just want to say congratulations to you, sir. This is our 250th radio show.
Oh my gosh.
So we've been on for quite a while. I looked it up. Our first radio show, you want to take a guess when we did our first radio show?
Would have been around 2016 maybe?
Yeah, you're in the right year. You're in the right year. November 29th,
wow,
2016. That was our first ever radio show. So,
and what are we up to on TV shows?
Today we're going to record episode 384. So we're rounding the curve to get to episode 400.
I can't wait to 400. We'll have to do something special. The 300, we did the reenactment of the 300 Spartans. That didn't go over well, though. I didn't have. We couldn't
figure out 400. There's 400 years of silence between the Old Testament and New Testament.
There you go.
Maybe we'll just go silent for the show.
Oh, that would be kind of cool.
We'll have a silent show.
Or just silent. Derek and I do that.
Silent movie?
We could do a silent movie with the subtitles. Okay, let's put some thought into that. All right, Aaron. So, March 16th, 2020, the reason I know you exactly positively remember that date, tell everybody what we were doing scrambling around here that day as we normally did prior to a workshop.
Well, that was the day that, we had a workshop that night, and we had like a record number of people. We had 60 or 70 number of people signed up. And then I think it was about 4 or 4:30 is when they signed an executive order that was like effective immediately. You can have no more than 10 people?
10, I think.
No more than 10 people in a room. So here we are loading up the cars to be like, all right, we're heading over to the Holiday Inn for our 70 plus number of people in a room.
Yeah,
here we go.
And we didn't know what to do. And then remember how many people showed up?
5.
Plus what else?
Plus, the first time I've ever seen this, plus a service dog.
So
you technically had 6. You technically had 6.
And if I remember, he seemed more attentive than anybody during the workshop. I think I dressed
He was
more.
answering, raising his hand.
Yeah, I
got a question.
Heck of a service dog. And then the next night, we just went on and canceled the next nights. Remember, we were supposed to go to Elizabethtown, and we had 60 or 70 register for that. Man, what a mess. But, there's some things that come out of things that are a good thing. I do miss the workshops, desperately miss those, Aaron, because you know me, I love interacting with people. But we have, I guess, allowed us to spend more time on the TV and radio show, which our viewership and listenership, Gina, our media buyer, checks all the ratings, has really gone up. So we're very thankful for that. Were you going to add to that? Do you have anything to say?
I miss them a little bit too.
Yeah.
They made for long days, but that's okay. It was fun to kind of sit and talk with people, and there was always at least one person that was interested in the camera equipment. And, well, what's that do? Well, what's this do? And it was always fun just to interact with people.
And nothing wrong with dinner seminars, folks, but these were totally different. We didn't serve dinner. I might have some fresh, pot of water in the back of the room and some mints if we were lucky, but that was the purpose. I didn't want to distract with dinner, or I didn't want people thinking there I was trying to, buy them dinner in exchange for making them come to an appointment. What I was trying to do is educate people. And what I loved at the very end, Aaron, was question and answers. I had one gentleman that went to some of these dinner seminars. He said, man, they won't let you ask any questions. As soon as dinner's over, they want you to set up an appointment. You're going to sit here. I'd spend sometimes, 30, 45 minutes answering just questions.
Easily.
Yeah. So I miss those folks, but you know what? We're going to try to kind of recreate as best we can in radio what I did with a workshop with Annuities 101, but boy, we've added some nice twists to it. So here's the deal. Listen carefully. Whether you've ever thought you loved annuities or hated them, okay, it doesn't matter. You need to listen to this show, because on this show today, I'm going to tell you the truth about annuities and why these products. Listen carefully. This show is dedicated to savers. We're not catering to investors or speculators. Why savers really need to understand annuities and what's going on in the market that's pretty scary with a lot of annuity peddlers out there pushing these products. I'm Tony Walker. You're listening to The Worry-Free Retirement. I'm going to come back with Annuities 101. Who can you trust? It's one of the most important decisions you'll have to make. Question is, are you ready? Well, we're here to help at Tony Walker Financial. We care more about you than we do your money, and we have over 2,000 happy clients and an A+ rating with the Better Business Bureau to prove it. Rolling over a 401k, confused about Social Security, maybe you're afraid of running out of money. Learn how to use and enjoy and protect your hard-earned money. Log on now to TonyWalkerFinancial.com and let's get started. Welcome back to the Worry-Free Retirement, folks, and I'm going to try to reenact one of my most popular workshops ever, Annuities 101. It's been updated for the 21st century, and we've got some really good stuff coming your way. Aaron, as we record this show on September 21st, 2021, to say that there's a lot of uncertainty out there with the economy, the stock market, would you say that's the understatement of the year right now?
Understatement of the year, yeah.
It's crazy. Yesterday, I was too busy working. I saw a lot of people yesterday, but something about some lending, in China had problems and the market went down. Folks, this is just a reminder that this world, this global economy, if you want to call it that we're in, it allows for so much volatility. So again, if you're one of those savers out there, and it's okay to have some money in the stock market, you're going to find out, a lot of people hate annuities. Folks, I don't hate any financial product. And I can't believe many advisors and financial entertainers refer to this word hate on products. You know what I've found, Aaron, over the years? Of course, I've done this for 37 years, and I've been trained in all products. I've been licensed in securities since the 80s, annuities, REITs. I've sold about everything. Life insurance. What I've found is, Aaron, is this. This is a truism. There is no perfect financial product. You got it? Okay. But actually, there's no terrible financial product. You got that? What I found, Aaron, it's trying to find the right product that's right for you. Let me use an example. And the financial world is the only industry that does this, that pigeonholes people. They make them feel bad about certain products. They tell people how much they hate annuities or whole life or whatever the people are shouting about. It would be automobiles. If you think about it, Aaron, it almost is mind-boggling. How many different makes and models, sizes, colors of automobiles can you think of? How many would you say?
Oh, a ton.
Hundreds probably.
Hundreds,
if you really thought about it. So can you imagine if, let's say I'm a car enthusiast, and maybe I'm a pretty good one, maybe I'm a good mechanic or whatever, and I look out in the parking lot and I go, what are you people thinking? Why in the world are you driving X car? You're idiots, or whatever they're saying, And then I went on to say how much I hate this or hate that. And then you feel like a goofball because you're thinking, well, I guess this guy knows what he's talking about. But deep down you'd say, well, that's the most ridiculous thing I've ever seen, right?
Right.
Different strokes for different folks. But folks, that's the problem. In the financial world, we have these know-it-alls, and they're strong-arming people, and they're doing it either for money, you can always follow the money as we're getting ready to do, or they are basically ignorant as to how these products really work, called annuities. So we have to understand that these products, first of all, especially what we call fixed annuities, which is what we sell, fixed annuities, listen closely, are geared towards savers. So folks, and I'm going to reference a publication I just downloaded off the internet. You can get these from all kinds of sources. There's so much information on the internet, and most of it is really bashing annuities. Most of these people that are constantly telling you how much they hate annuities or dissing annuities or whatever, they are generally investors. They are people that represent Wall Street. Now, do we represent Wall Street as well? Yeah, as a fiduciary. I'm a registered investment advisor. We have products through Wall Street. Right? Aaron, you've heard me talk about stocks, bonds. Yep. I don't have a problem with products from Wall Street. What I have a problem with is savers blindly risking their money with Wall Street when they don't realize that these annuities possibly could be a good option for them. So here's what we're going to do real quickly. First of all, and Aaron, I know you've been in our meetings where we test our analytics on the website.
Right.
One of our most popular click-throughs is the page that says how we get paid. Does that kind of surprise you a little bit?
That makes sense to me a little bit. People want to know what... I guess people probably think, well, this is going to cost me something. I'd like to know where my money's going.
That's good.
I'd like to know where my money's going.
Yeah. So let's talk about that. So folks, there's only 3 ways we in the financial world, and this would include, banks and insurance companies, et cetera, get paid. Here's the first one. It's called Assets Under Management, or AUM. Assets Under Management, or AUM. Now, this is what a money manager does. Now, we at Tony Walker Financial manage money. We do charge for assets under management. Now, our fee is a whopping 0.8%, usually about half of what most money managers charge. In fact, Aaron, later in the show, remind me, I'm going to share with the listening audience here how much these fees really add up. It's really important to understand that. But that's basically, we get a fee on that. Okay, that's a recurring annual fee. We get that every year, every quarter, as long as you have money with us in these stocks, bonds, mutual funds, in other words, Wall Street products. Okay, it's number one. The second way people get money, make money in our business, is through one-time commissions. I refer to those as OTC, one-time commissions. Now, for instance, annuities fall into this. If an advisor sells you annuity, which again, we're licensed to sell annuities, that advisor or us gets a one-time commission, kind of like a real estate agent. Does that make sense, Aaron?
So one time,
that's
period.
It.
That's it.
Now, here's what's interesting. Like a real estate agent, the agent is paid by the seller, not the buyer. So think about this. If you would buy an annuity from Tony Walker Financial, the insurance company pays the commission to us. They don't pay that out of pocket. So if you gave us $100,000 and we in turn gave it to the insurance company, let's say the commission 6%, they would pay Tony Walker Financial $6,000. That's about the average commission on annuities.
But the individual's not cutting a check to Tony Walker.
Correct.
Okay.
Now there's surrender charges and all that. And by the way, folks, if you want to download a great booklet that I've written, I've specialized in these annuities longer than most people could even spell annuity. You need to go to TonyWalkerFinancial.com, download the Annuities Made Easy Guide. It'll explain the difference between commissions, surrender charges, all those things you need to know. And of course, before you ever buy an annuity, get a second opinion from us. Golly, I'll tell you the other problem we have, Aaron. There's a lot of insurance companies. We represent a bunch of them. And in some cases, these are viable. Don't get me wrong. But these insurance companies offer bonuses. Okay? They'll actually give you extra money to put money in the contract. That's even after paying the agent. So on the surface, that sounds pretty good, right?
Sure.
Mr. Orender, give me $100,000. We're going to give you $10,000, and we'll also pay Joe the annuity peddler his money. And you're thinking, what's wrong with that, right?
Yeah.
Well, as we're going to find out, folks, insurance companies only have so much to go around. So if they're going to pay you a front-end bonus, again, I'm not saying there's anything wrong with this, but this is why you better get a second opinion from somebody like us before you just go putting your life savings in these bonus annuities. There is a catch and there will be a cost. They will try to get that money back some way, somehow. I love insurance companies to death, but they're not your friend. They're not your family. They're giving you a bonus. They will figure out how to get that money back. So don't be enticed entirely. Look at it possibly, but don't be enticed to move your life savings into annuity peddlers offering bonuses. It's very, very tricky and potentially dangerous stuff. But that's one-time commissions. And finally, this is one of my favorite, other people's money OPM. Remember I talked about that in my book, Don't Follow the Herd? So what is other people's money, or OPM? Well, that's usually the big boys. That would be the banks and insurance companies. Let me give you an example. Aaron, you go to the bank and you have $100,000 and you want a CD, right? Certificate of deposit. And the bank says, okay, Mr. Orander, for the use of that money, we're going to pay you 1%. We can take your 1%, but what are they doing with that money in the meantime? Do you think they just lock it in the vault and leave it in there?
Well, no, they got to use it for other things. They're borrowing it, loaning it out to other people.
There you go. So they're taking your money. Let's just say in its most simplest form, they loan it over to Derek.
Is that where those bonuses come from?
Kind of. So then the bank would loan the money to Derek. Okay. Derek pays the bank back for his car loan, let's say 3%. So now they're working on a spread. They get 3, they pay you 1, they get to keep 2. That's its simplest form. That's called a spread. Insurance companies do the same thing. The average insurance company's bond yields and their mortgages, that's what they're investing in, is around 4 to 5% depending on the climate. They might pay you 2, may pay you 3. They keep the difference. That's called the spread. That's called other people's money. So folks, don't be naive to this. All of us in the financial world are either going to make money on fees through assets under management, AUM, one-time commissions, OTC, or the spread. Now, at Tony Walker Financial, we do both because we're so well versed in the world of Wally World or Wall Street. We sell those products for a fee, assets under management, again, which is 0.8%. Then we can also, if you like, offer products through insurance companies, annuities, long-term care insurance, life insurance, Medicare supplements. If you buy those products from us, they go through the insurance company. The insurance company takes your money, pays us a one-time commission. Make sense, Aaron?
Yep.
And then off you go. So when I come back, I want to go through, I'm going to spend the remaining time, I want to go through a publication. And by the way, folks, there's hundreds of these. If you Google, are annuities right for me, or, good and bad of annuities, whatever you want to Google, there will be more articles, more web. I mean, there's so much on annuities. And again, what I wanted to do, I just pulled off a random booklet that I downloaded from one of these sites. And I want to share with you how Wall Street, how much they hate annuities, and why investors need to be careful hating these annuities so much, because it reminds us they don't understand the saver, which we do. I'm Tony Walker. You're listening to the Worry-Free Retirement. Good stuff coming your way on Annuities 101. I'll be right back. Have you recently retired, been laid off, or offered a pension buyout? Has the company you work for moved, been acquired, or closed its doors forever? And finally, do you have a 401k with a previous employer you'd like to move to safer territory? Then take advantage of this opportunity to move your 401k or lump sum pension to Tony Walker Financial. Let's meet in person to discuss your retirement options. Log on now to TonyWalkerFinancial.com to schedule your free, no obligation appointment. Let us help you today.
Welcome back to the Worry-Free Retirement, folks. I am America's favorite financial sidekick, Aaron Orander, and I just wanted to take a minute to remind everybody you can listen to past episodes of the Worry-Free Retirement. All you got to do is go to SoundCloud.com. That's SoundCloud.com. Now, when you get there, right there at the top, there's a search bar. Just type in there, the Worry-Free Retirement, and when you click search, bam, there you go. You're going to see our awesome bobblehead. Just click on that, and you're going to find all of our past radio shows. Now, if you'd rather watch TV shows, but, for whatever reason you can't make it, you can't get up that early, whatever, no problem, folks. We got you covered. All you got to do is go to YouTube.com. That's YouTube.com. And in the search bar up there at the top, just type in Tony Walker Financial, and you'll see Tony's smiling face. Just click on that, and you're going to find not only past episodes of the Worry-Free Retirement, you're going to find all types of other video content.
Well, thank you, Aaron. That's very helpful. And by the way, before we get into the meat of the program today, I'm going to quiz you. What do you think? And I've usually said this, I think I've said this many times, but what do you think is the number one fear of most Americans, particularly savers?
Spiders. No, I'm just kidding. I don't know. In all honesty, I would probably say not having enough money or running out of money.
There you go. You've listened very well in the past. Well, guess what? Recently, what has surpassed that is not running out of money, which actually it's tied to that, but it's this fear of inflation. Have you been out buying products lately, Aaron?
Have I been out buying what?
Just buying anything lately. Have you noticed how prices are gradually going up? My oldest boy, Philip, said, "Hey, Dad, I couldn't believe it. I had to buy a new dishwasher rack, just a dishwasher rack, $160." And he kind of was like, "What's the deal, man?" He was at the appliance place, and the guy goes, "I'm sorry, these things are just going through the roof in terms of prices."
Well, I know there's a lot of people out there listening right now that probably can understand and relate to this. Ammunition for guns has gone up ridiculously over the past year. I mean, ammo is just
so much for insane. Just spraying bullets everywhere. You better
you better save them.
Yeah. That's no more target practice. So let's talk about that real quick. So how do we stop the bleeding of inflation? Well, that's pretty hard to do, but basically, let me give you a few lines of thought, and then we're going to read this periodical I downloaded. Basically, to keep inflation at bay, you got to lower fees, folks. You got to lower costs. You got to lower taxes. That's something we can help and show you how to do at Tony Walker Financial. I believe, and you're going to see this in a minute in this illustration, you've got to reduce risk. See, what you've been taught is you have to grow your money to overcome inflation, and as we're going to see in a minute, if we go through another stock market like we did in 2008, you think inflation's bad. Imagine you're retired and you're trying to climb back up that hill after tumbling down. It's very, very scary. And then finally, you have to protect your principal to some degree. Now, you can put a little bit of that risk, but if you start losing principal, game over. Now, what I did here, and again, folks, you can Google whatever you want to. There's tons of reports online. I just went and grabbed one in particular. This is a retirement income guide or some sort. And by the way, nothing against these folks, but I guarantee this particular company, I bet the owner of the company didn't write this. This is a fairly large company.
You think it got passed off to somebody?
I write all of our TV shows, our radio shows, all of our booklets. The reason I do that is, folks, I see so many people. So what I'm doing is I'm taking the information I'm learning from others, savers, and I'm trying to put that in a text that other savers can learn from. So this could have been written by some ghostwriter in New York, for all I know. I don't know. But anyway, one of the things they said, one of the biggest fears is running out of money. Bingo, I agree with you. Being forced to turn to your children, going back to work, blah, blah, blah. So they say, now listen, this is an investor, you can tell. Many folks think the key to achieving the goal is very low volatility investments such as treasury bonds. So already they're trying to tell people, don't go to that safe stuff, you'll never do it. Let's go to the next thought. This sounds like live well, die broke. There's another theory. Why don't you just spend every cent before you die? They say this isn't a typical goal among our clients, but there are some people who think success is spending all the money before they die. But here's the key, Aaron. This is why we know they don't understand annuities. Listen to this. But this is often a risky proposition. There's no way to know exactly how long your retirement will last, and folks who attempt to do this may run out of money. That would be true, right? I mean, that could happen.
Yeah.
But that's why you want an annuity. See, folks, let's stop right there. This isn't an article written by investors. These investments people are writing these articles. And again, they know that you could run out of money. The only product, let me repeat this, the only product that can guarantee, I didn't say speculate, guarantee you won't run out of money is an annuity. Of course, they go on to talk about annuities and they bash them and talk about basically, they don't say they hate them, but they basically do. They can't stand these products. And basically that's because they don't get any recurring fees on them. Remember, folks, annuities are one-time commission products. They're one and done. So a lot of money managers don't like that because they're going to have to get out and work every day and go out and find new business to get commissions. The idea of a money management process, and we've seen this as our Charles Schwab platform has grown. Aaron, I know you probably don't keep up with this side, but for instance, since starting the Charles Schwab platform in 2017, we're over $165 million.
Hey, congratulations.
Pretty good.
It's awesome.
Well, and we charge 0.8%, but anybody riding down the road can do the math. That's quite a bit of money every year. Well, imagine if we charge 1.5%. We could double our income.
Oh, man, I could get that Ferrari I've been wanting.
So basically, folks, let's kind of understand where we're coming from.
Come on, folks. Don't you want to raise your, don't you want to raise your fees for me? Come on.
So let's talk about this. So what I had our own other fellow fiduciary, Heather Hughes, do, I said, okay, let's stop here for a minute. Let's just imagine that we're going to select a money manager who, let's say, charges 1.5% in fees. Okay, all they're going to do is take care of your money, but they've got to charge 1.5% in fees. You also could invest it with Tony Walker Financial. And we could do this in our split IRA. And you might want to do that. And if we did that, it would be 0.8 or 0.8%. The final thing, here's an option, just an option. What if you took the same amount of money and through somebody like us purchased a fixed indexed annuity? And this would be a non-income product, meaning it's an accumulation product. There's no fees, no risk, principal's protected. And basically, we're going to look over a 10-year window. You with me here? So let's do this. Okay. Look at my notes again. All right. So you take $300,000, you put it with a money manager charging 1.5%, and let's say the money manager over the next 10 years earned 6%. If there were no losses, just 6% on average, you would have at the end of 10 years about $461,000. Not bad. All right. No losses. Let's say you put that same money with Tony Walker Financial, same interest rate. Let's imagine, now this is not guaranteed, folks, but let's say we earned you 6% as well for 10 years, but we charged 0.8%. Your balance would be about $34,000 higher. You'd have almost $500,000 with us. Pretty good. See how much money we're saving you? Yeah, I mean, that's a way to beat inflation. See, I just gave you $30,000 more money because we charge lower fees. Now, this is interesting. If you put it with a fixed indexed annuity, and let's say the fixed indexed annuity only averaged 3%, much less, half, but no fees, yep, at the end of 10 years, you would have the less money, $403,000. So on the surface, you say, Tony, why in the world would I ever buy a fixed indexed annuity? That sounds awful. Well, that's not the real world. Let's go to the real world. Let's imagine, remember last year with the pandemic, the market went down over 30%. Let's imagine beginning in year 5, Aaron, let's go back in time. In year 5, the stock market goes down 30%. Are you with me?
Okay.
Okay. The other guys over here managing their account at 1.5%, if they had a 30% loss and then went right back to earning 6% thereafter, their $461,000 you thought you had would now be worth at the end of 10 years, $305,000. 1 year of losses. Can you imagine? Now let's go to us. Tony Walker Financial, we're the same thing, earning 6%. There's a 30% loss in year 5. We go from $495 to $327. A big loss, but still ahead of the other guys at 1.5%. Here's what is a shocker. By taking no risk, paying no fees, in the 5th year, when the market crashes, you're not going to make anything with a fixed indexed annuity, but you don't lose a penny, nor do you lose what you made in prior years. Are you with me?
That's called your new floor.
Correct.
Okay.
But here's the power of the fixed indexed annuity. When the market does come roaring back, which in this example we imagine in year 6 it does, the annuity hadn't lost anything, so it just goes up again.
It just goes up. It can't go down.
Can't go down. So we're starting so much farther ahead. It's kind of like the hare and the tortoise. Remember the tortoise goes by the hare because he's over there sleeping on the side of the road because he's got such a big lead?
Right.
Okay. Now look at the final numbers. So at the end of 10 years, with a fixed indexed annuity at 3%, with a 30% market loss beginning in year 5, since we don't have any losses with a fixed indexed annuity, at the end of 10 years, instead of having $403,000, we still have $391,000. In this example, it's just an example, folks, but it really could happen. We are so far ahead of those out there trying to take risk and paying all these fees and taxes.
I mean, in that example, you're almost $100,000 ahead.
Oh, yeah.
Almost.
With no risk.
With no risk.
So, folks, you're sitting there saying, well, Tony, could that really happen? Well, we don't know, and that's the whole point, folks. So listen carefully. If you are a saver, if you're one of those folks that's more concerned about the return of your money than on it, you got to take action. You got to quit listening to the hate mongers out there, the know-it-alls, the one-size-fits-all people. You got to first determine who you are. If you're somebody that doesn't like a lot of risk, if you're looking for ways to beat inflation, lower fees, lower cost, you need to be talking to us at Tony Walker Financial. And the best part of all, it's absolutely free. All you got to do to speak with me in person or by phone is log on to TonyWalkerFinancial.com, TonyWalkerFinancial.com. You're going to click on that Let's Get Started button, and that information is confidentially sent to our offices, and we will follow up with you immediately. Or just give us a call at 877-499-9255. That's 877-499-WALK. Well, we hope you've enjoyed today's program. Don't forget also at TonyWalkerFinancial.com, download our free Annuities Made Easy booklet. That's going to help you a lot. And then after you read it, you please give us a call or let us know how we can help. Well, between now and next week, you remember, you've been listening to the Worry-Free Retirement, but between now and then, if all else fails, you be worry-free.